Now here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally. And we've got a lot of results coming up for you today, right in the middle of results season. A super Thursday, in fact, of results. Telstra's Andy Penn under competition pressure. He talks to our own James Dagger-Nixon. We'll ask Telstra shareholder Anton Tagliaferro from Investors Mutual what he thinks of it, and also the rest of the reporting season. National Australia Bank Director Geraldine McBride joins me to talk tech, her company MyWave, and banking, and how the NAB board is regrouping after the fallout from the Royal Commission. And Britain beefing up its trade resources ahead of Brexit, our exclusive interview with Her Majesty's new Trade Commissioner for Asia Pacific, Natalie Black, who is also in town. Yeah, very big show. But first, stormy days for Suncorp, suffering a 45% fall in its first half profit, hurt by losses arising from a surge in natural hazard claims following a hailstorm in Sydney. Sydney-siders will remember that one, and lower investment returns. Net profit coming in at $250 million compared with $452 million a year earlier. Firm declared an interim dividend of 26 cents per share. Well, I actually sat down with Suncorp CEO Michael Cameron to go through this complicated little business, not so little, a little early. Michael Cameron, thank you so much for joining me. Now, the shares are off as we speak, about 3.7%. How should investors look at these results, which clearly, I mean, you're a bank, you're a general insurer, and then you've got both natural disasters that we all know about so well, and you've got regulation coming?
Yes, I think if you look at things like natural disasters and investment performance, then that's core to our business. But if you look through that at the more internal factors, the business is actually performing very well. On an underlying basis. The underlying performance, if I think about the insurance business, that's performed very well. The bank has seen a very good growth in deposits, and that's set to counter the slowdown in mortgage growth across the industry. Our business improvement program has exceeded targets again, and we're forecast that will exceed on a full-year basis. We've also made a number of investments in our digital platforms, and now the opportunity is to turn that into turn those experiences for our customers into more transactions, more revenue. And I think overall, if you look at our key indicators, it highlights that the underlying business is actually in really good shape. Of course, it was disappointing to see hailstorms in Sydney and the unfortunate events up in Townsville, but that's the business that we're in.
Indeed. I gather blew a hole in a lot of people's Christmas, those hailstorms. Just on the insurance side and natural disasters, are you looking, you're obviously looking at increasing reinsurance. How do you look at this now in this world of climate change, and how do you reassess this? What is the norm?
When we look at the natural hazard allowance and our whole reinsurance program, we typically look at history over a very long period of time. And there's no doubt that in recent times the frequency of events has increased and the severity has also increased. So as a result of looking at it, probably a shorter period of time of history, we've now worked out that this is the time now to signal that next year we'll be increasing the allowance by $100 million. We'll also be buying an extra $200 million worth of cover. So it is quite a step change, and it does reflect those changes in patterns.
So what does that mean for premiums? Because looking at your, on the general side, your motor premiums have already been growing at 6%. What are your other ones? Your home at 3%. Can you continue to keep these sorts of numbers going? Because that's how you balance your books, really, isn't it?
Yes, it's all part of the insurance cycle, and what you'll find, if there are a few years where there's very few events, no earthquakes, no storms.
But can you say that going forward?
No, that's exactly right. But when that does happen, you see premiums soften and competition really intensify, and that's just part of the process. But unfortunately, at the moment, where we're faced with increasing costs to support the business, that ends up being translated into increases in premiums for our customers.
So these events will harden the market up generally, you and your competition, but can you look to your 12% insurance trading ratio, do you think? Is that going to be maintained?
It would be, I guess, a perfect environment if that all happened in sync, but unfortunately, particularly with price rises, we take a long-term view, and where there is a big step up in things like reinsurance, it takes many years to actually recover that. And we try to offset it, of course, with efficiencies, and part of the success of the business improvement program has been to reduce what we call claims inflation, or the cost of rectifying those things for our customers, and that's meant that we've probably been more successful than many other companies in being able to keep some of those costs down.
Let me jump to Hayne and the ramifications. You told me off camera that almost every one of the 76 recommendations in one way or another impact you. Yes. You must have been hugely relieved, though, that Hayne didn't ban vertical integration, because of course that really is Suncorp's model.
Well, actually, I think what the Royal Commission report has done was almost confirm that the strategy that we put in place, the operating model that we put in place a couple of years ago, is the right one. A move towards digital and a move towards putting the customer in the centre of everything we do. So it's really meant that the theory behind our strategy and where we're headed and the actions we're taking have been really confirmed by the whole process.
But you're a bank that has an insurance business, that has a wealth business. Yes. You were before the Commission, agonising moments. I know the telly's tried to make it current again in recent times. Are you now reformed in terms of, or how are you changing your culture, I suppose?
Well, I think of our business as a horizontally integrated business, and that we have a range of businesses, a range of brands, a range of products and services that are sort of drawn like that, as opposed to we don't own our own distribution, and it's a very different model to what I think of as most conglomerates these days. So a unique model, and it provides diversification. We saw in the recent 6 months the bank contribution for the business was a significant part of the result, and that is one of the benefits of having that diversification. But also for our customers, it's about providing choice, a range of products and services, and we deliberately haven't gone down the path of having a cross-sell model. We were pleased to see the moves in the report, or the recommendations around a banning of cold calling, of hard selling out of context, which we don't do. Yes. And I think that will improve the level of trust right across the industry.
Yep. Mortgage broking, though, is it 68% that you do through brokers? How is that going to impact you in terms of possibly going up, well, obviously ending trailing commissions, but possibly going as far as moving to the lender to actually pay for finding a loan? Yes.
Well, I think nobody intends that as a result of the changes that the major banks will get any more market power. I think that competition to preserve that is important.
So you think what the government's doing now, which is saying, wait a minute, on that 76th recommendation, that's the right thing to do?
Well, a lot of has to be done, but I think there's a couple of points to be made first. Certainly we are, the mortgage brokers are very important to us, but I think importantly they're really important to customers, and many people use them, as you're aware. But we want to see transparency. We want to see the removal of any conflicts of interest in the way that they're paid, and some level of consistency. And at the end of the day, those mortgage brokers have an obligation to act in the best interest of the customer. So we'll be working with government, regulators and the industry to make sure that whatever the implementation of these recommendations are, that the customer is actually protected and the level of competition is preserved.
Well, you are offloading your life insurance business. That is still on track for completion on the 28th of this month?
That's right, yes, it's getting closer, but we are very confident of that completion occurring on the 28th. We look forward to a 20-year relationship with TAL. I think our business...
This is Daiichi, yes?
Yes, our businesses are very compatible, and I think their ability to manufacture great product and for us to be able to distribute it is a real bonus.
Regulators, APRA still has to tick the box, but you're confident that it'll go through?
We're down to the last couple of steps, and whilst I can talk about how progressed we are. The last two steps involve the...
And that's a big lick, obviously, coming in for you. What are you going to do with it for shareholders?
Yes, we've undertaken to return all excess capital that we have. On this particular case, it's about $600 million. And once the completion occurs, we'll be updating the market on the best way to distribute that to our shareholders.
But you might be doing a little bit with franking credits, given the risks going forward with the Labor government?
We're trying to maximise the outcomes for all of our stakeholders, so we are looking and exploring a few options, including, as you suggest, a small dividend that would pass some franking credits to our shareholders. Michael,
finally, outlook for investors.
In relation to Suncorp?
Yes.
Well, I think the main thing is that the core of our business is in great shape. We've unfortunately, the actual reported result has been dampened by a couple of events, natural hazard events and poor investment performance. But as we go into next year, I think we've got a great model, a great strategy, and the opportunity now to convert all of the hard work around our digital business into improved revenue is there. So we're really just getting on and delivering what we say we want to deliver.
And real clarity, presumably, at full year on some of your targets.
Yes, there was a lot of interest in the areas of next year, and we'll wait till the full year, and we'll know a lot more by then around things like regulatory costs.
Michael Cameron, good to talk. Thank you so much.
Thanks, Ticky.
Well, until the start of this month, NAB non-executive board member Geraldine McBride was busy contributing to her expertise in tech and digital to the board. She's still doing that as the founder and chief executive of MyWave, which is a business that boasts a unique intelligent personalisation platform that makes business personal at scale. She's going to float it this year, but as you can imagine, she's had a rollercoaster few board meetings since the Kenneth Hayne report, which drove the resignations of her chairman, Ken Henry, and bank CEO Andrew Thorburn. Now, she joins me now mainly to talk about her favourite subject. Geraldine, thank you so much for coming on. Now, I've got to just hit you with a couple of questions around NAB, if you'd be so kind. Now, look, as an NED of the board, to have such an extraordinary dressing down, you know, of both the chairman and the chief executive, by Kenneth Hayne, what impact did that have on you?
Well, I think that it's never about me. It's all about the board and how the board handles these things. And clearly, you would know that was a pretty challenging week. And as a board, you've got to look at those reports. You've got to listen to the feedback.
But your directors, you're all individually accountable, aren't you?
Yes, but you have to act as a cohesive group, and you've got to do what's in the right interests of customers, shareholders, and the brand. And I think that. The events have unfolded, and we had to take the actions that we took. It was a very, very difficult week.
Incredibly damaging for the bank. I'm just literally fresh off the press this afternoon, a Roy Morgan poll. NAB is the biggest loser. It's now the most distrusted bank in Australia. I guess we shouldn't be surprised about that. But, I mean, it must have been an agonising week. Your chairman, Ken Henry, he'll lead the succession planning. Why do you feel that's the right decision, given the views of Hayne? And how long will it take to regroup, you
Well, I think the board is very unified in its approach in terms of succession. And I think that you'll find that we've listened to all of those feedbacks that we've had in the report, and we've got a very clear strategy. We've got a very clear plan around board renewal, and more of that will be announced in the coming days and weeks.
And it's right that Ken Henry should lead that.
I can't comment on that right now, but there are going to be some announcements being made in the very near future about how that's going to happen. And but we will do it in the right way, with the right governance, to your point, restore trust in the brand, and that's very, very important to us. We're very focused on the customer. We're very focused on doing the right thing by the shareholders as well, and to making sure that we restore trust and faith in the brand of NAB, because it is still an extremely good bank, and I have a lot of time for the people and everything that they have done there.
Right, let's move to your business.
And
customer focused as well, which is central to to MyWave. Tell us a little bit about the business model, what you're offering.
Well, the business model, and in fact it goes back to some of the issues that corporate Australia is struggling with, and some of the things that are even raised in the Royal Commission. A lot of the reasons why businesses are struggling to service customers properly, is that the systems and processes were never designed for customer experience. They were all designed to be able to run a really good bank or run a really good retailing organisation. We've got to put intelligent technology that actually has got a brain that's centred on the customer, on you. and your preferences and what you want, and remembers you. So when you come to get your next home loan, or you want to move your money and save money on your bills and save for something, or you want to go and order that next dress that you've had your eye on, then our technology actually remembers that and gives you deeply personalised experiences.
What about the trail of forms that you had to fill in and all that sort of thing? That's a nightmare, even now.
Absolutely, and that's all gone with our technology. It's so intelligent, though, it has a brain, so will they say, what do I already know about Ticky? All right, Ticky never has to fill in a form on a mortgage experience again, because everything that was known about you, about your income and all of those things. Remember, yes. I can have been banked with someone for 30 years, but you still have to fill out, a 20-page form.
Yeah.
Whereas
so
our
how come you guys get
that.
access to all of that? And are there privacy issues?
No, well, a lot of that data, funnily enough, actually exists often inside the enterprise. So the trouble is it's stuck in all those old systems. So our technology has the ability to intelligently pull that up for your benefit, yes. And then delivers you the outcome. So all you have to do is talk to it in natural language or type to it. Yep. It then goes away and says, you could say, am I on the right energy plan for my house?
But you don't then flog my data to
No, not at all. Trust is really important.
Yeah.
And I think, again, this is a core theme from the Royal Commission report. Trust is everything. So everything needs to be, businesses need to put their customers at the centre.
So how do you, your business model,
yes.
in Australia, say,
yeah.
how do you get a return?
Well, we license and teach these enterprises
yes.
how to build intelligent, personalised experiences. Most companies wake up in the morning thinking about themselves. They don't think about their customers, unfortunately, and that's not just true of a bank. It's
yes.
true of all companies. What we do is we actually say the customer's looking for an outcome. So our technology then, you talk to it, type what you want, it goes away and brings together the data to get you the outcome. So you're never paying more energy than you need to. You only have to answer, say, 4 questions to get an insurance outcome.
So you're not necessarily saying, oh, AGL will license you. It might be another business that licenses, that wants to look after its customers and says, hey, we can do equivalent to the compare the market for electricity.
Yeah, they could. Absolutely. Yes, it could be. So smart energy companies are already using us, and they're using us to give much more clever, intelligent, personalised business processes. So they're saving, 60 to 70% off call centres, and they're improving their net promoter scores significantly. But equally, we can be used in what we call ecosystems, where another entrant might come along and want to use that technology to deliver a better outcome.
So some of your, you're growing, you're a $30 million sort of enterprise now. Yeah. Some of your customer satisfaction numbers are pretty fantastic. 30% increase in sales from intelligent personalisation, 200% improvement in marketing efficiency, blah, blah, blah. How do you get those stats?
So that's come from some of the pilot work that we've done, all right? So this has actually been fed into some of the business cases that have gone up. The return on investment in the technology is all in less than 12 months.
Yes.
The other good thing about this technology is we can deploy it in weeks and months, not years.
And then you've got a different model in Britain, and that is, and it's sort of more the customer, you get paid by transaction, and that's because there's open data in Britain, unlike here. So Britain's ahead of us.
Well, what we did is that because Britain was ahead, we actually took the technology live in Britain first, because My Data Initiative in Britain, we've already got British consumers entering their postal code. Attached to the British postal code is your meter type, your meter number and your tariff. We only needed one more point of data, which is what did you spend on your last electricity bill, to do know nothing about the customer, get them onboarded and switched in less than 6 minutes. Yeah. That's the power of this technology.
Okay, so briefly, you must come back and talk about this between now and September. You think a likely ASX float?
Yes, because the ASX is, essentially the second or third largest technology exchange now internationally, and our customers are all very, very large Australian businesses. Yes. Our technology is mission critical for what they do, and we need to become a proper company, not just a startup. So we think the ASX is a great place to be doing that.
Geraldine, McBride, I hope you come back and on the way through and talk us through it. Thank you so much.
Thank you so much, Ticky. Very nice to talk to you.
OK, well, look, talking about Britain, 43 days to Brexit, unless it's postponed, of course. But it's something global markets will be focusing on more and more in the days to come. Meanwhile, Britain's trading resources are being beefed up in the expectation that it will be able to do free trade agreements with countries like Australia. Natalie Black is Her Majesty's newly appointed Trade Commissioner for the Asia Pacific, based in Singapore. She's on her first official visit to Australia. Natalie Black, congratulations on your new role. Now, it's a very senior role within the British-Australia trade relationship, and a new one.
Well, first of all, Ticky, thank you so much for having me here. It's a beautiful day in Sydney and I'm very, very pleased to be here. I must say that I've been, for the last 2 New Year's fireworks display here in Sydney, so it's fantastic to be here for work.
So you know Australia pretty well.
I know it well and I love it a lot, and I'm very, very grateful to be doing this new role. So Her Majesty's Trade Commissioner for Asia Pacific. These are brand new roles around the world. There are 9 of us. And we are here to turbo boost trade and investment relationships. So very much out in the region, out in Asia Pacific, taking all of our relationships to the next level.
Now, interestingly, you're not coming to this job with a traditional trade background. You've had a very senior job in the policy unit, actually, at number 10. So what is your area of expertise that you're coming into this job?
So that's always a great question, and I slightly feel like I'm in my interview process again. But my big passion is technology and digital. And the UK has a fairly new industrial strategy, which is our vision for the future. And I see a key part of this role, building the relationships in one of the most exciting regions in the world to position us to deliver the industrial strategy.
So this strategy is throwing digital across many sectors, I suppose. What sort of sectors are we talking about?
So the industrial strategy is focused on making sure that the UK continues to be one of the most innovative and groundbreaking economies in the world. It focuses on a number of different sectors, but ones I would highlight are clean growth, for example, an issue that's very close to Australia's heart as well, energy. The role of artificial intelligence going forward. And we have set ourselves a number of grand challenges where we are bringing together the private sector, the public sector, the third sector, to really focus on those issues which are going to shape our collective futures. And what I hope to do in this role is talk to colleagues, particularly in Australia, around how together we face those kinds of challenges and use the cooperation between our respective companies to address some of these issues.
Right, so Britain and Australia in a pretty similar position there. Now we've got Brexit hurling itself towards us. Regardless of the outcome, you're presumably hoping that we'll be able to work on trading opportunities very quickly because at the moment you're not allowed to negotiate a free trade agreement, are you?
That's absolutely right. But as you have seen from statements from the Prime Minister, from the Secretary of State for the Department of International Trade, a real commitment to furthering the relationship with Australia in due course. And we have set up a number of working groups, and the very first one was established with Australia on that basis.
Right, so what sort of, I mean, depending upon what happens with Brexit, if a no deal happens, then presumably you'll be on WTO rules. You'll be working very fast.
So the Prime Minister made a statement on Tuesday in Parliament, which is very clear that the whole of the UK government is working very, very hard to make sure we get the best possible deal with the European Union. And you have a team of people, particularly here in Asia Pacific, who are focused on making sure we have the best arrangements possible.
And what would your priority be in terms of looking at trade opportunities between the two countries? What are the low-hanging fruit?
Well, there's a huge amount of opportunity in the relationship between Australia and the UK. I mean, we are already very strong trading partners, but particularly going back to the industrial strategy, there are a number of initiatives that we have started to work on together that I hope in due course we could take even further. So last year we announced a new fintech bridge between the UK and Australia. Fintech is a fast-growing sector here in Australia, and we've already seen some Australian banks investing in UK startups, and I'd like to see how we use any future arrangements to progress those kinds of relationships.
Right, which banks?
So ANZ announced last week that they would be contributing to the first funding round for a UK startup called Bud. And it's those kinds of relationships which were actually brokered by the Department of International Trade. So we brought Bud out here to meet some Australian banks, but it's nurturing and building those relationships that will position both the UK and the Australian economy in the best possible position going forward.
Natalie, another really important area is defence. I notice BAE Systems has announced today they're going to be doing even more maintenance on the F-35s down here as part of their business in Australia in the last week or so. We've also heard that Britain's last aircraft carrier stuffed with F-35s is going to be tootling around the South China Sea. And I just find this really interesting, this connection, our $35 billion deal. We've got Five Eyes, the importance of national security. Would you care to comment on the growing importance of the trade national security connection?
Yes, of course. I mean, the absolute linchpin of our relationship with Australia is around security cooperation, particularly through the Five Eyes partnership. That's a long-standing, enduring relationship. But what you're seeing with these announcements, particularly on the commercial side, is a commitment to growing jobs both in Australia and on the UK. And that's something that, of course, we want to see even more growth in.
And just coming back to Brexit, obviously there's a lot of busyness and chaos, but the dust will settle eventually. You must have been quite heartened, though, to hear, well, something of a change of heart by the Bank of England's Mark Carney. In the past, he's been very negative, particularly on a no-deal Brexit, almost chicken licker. Now he's talking up the opportunities, regardless of the scenarios, the opportunity to invest and a positive future.
So we're very lucky with the Bank of England. It's an absolute stalwart of the UK economy. I think one of the other interesting elements of his remarks actually was around the broader global economy. So it's easy with everything going on with Brexit to not pay enough attention to the rest of the world, particularly here on my regional patch. And the challenges we all face in maintaining an open and global trading system. And that is something the UK is absolutely committed to.
So once there is the freedom to negotiate an FTA, what sort of timing would you put on that? And will there be opportunities, presumably, to do trade deals and investment deals parallel with that process and perhaps before it?
So I won't speculate on timing, but what I will point to is the clear prioritisation that has been placed on Australia and the Australian relationship. It's seen really as a definition of global Britain, and we are already very proud of the strong relationship that we have here. Global trade between Australia and the UK is worth over £16 billion. It grew by 14% over the last couple of years. So the question will be, what can we do next? And my strong priority in this role will be making sure that together we focus on the challenges of the future and we make the most of the digital opportunity. So whether that's on open data, whether that's on artificial intelligence, but of course also protecting jobs going forward. And I think there's real opportunities of how we can work together on making sure that we are recognising not only what trade should be like in the future, but also how it is going to change.
So, for instance, we've got BT investing down here, opening their cyber hub in Sydney, and then open banking. You're a bit ahead of us on open banking. I'm wondering, how is that going, and what can we learn from each other there?
We are proud of the work that we've done to facilitate the fintech economy in the UK. We have some wonderful incubators. We have some really strong companies coming out. But we're really, really interested in working with Australian startups to help them grow as well. So we, at the end of last year, launched a program called Tech Rocket Ships, which was focused on identifying Australian startups who are looking to go global. And we would very much like to help them to do that.
And just how is open banking helping them access customers?
So our commitment to open data and all the close working that the government has done, whether that's between the Treasury and new emerging startups, or whether that's through the industrial strategy, shows a clear commitment to fintech as a sector. There's a whole range of initiatives there, but what we would like to see is even more collaboration. So I will be in the UK next week. One of my great pleasures will be bringing the 10 rocket ship winners along on that visit, and we will actually be doing some work with your High Commissioner in London to publicise the great Australian technology that we are identifying here.
Well, George Brandis will enjoy that, I know. Lastly, we've talked about the positives. Are there other areas? We know there are sensitive areas like agriculture, which you'll be working on and progressing as well.
Of course, all of this is complex and challenging. That's the reality of trade today, not just because of Brexit, but I would point again to the global challenges and tensions that we all face. But I think what you see in the Australian government, in the British government, is a commitment to do the absolute best for consumers and producers. And the long history of our relationship shows that we're well placed to have an even stronger partnership for the coming years.
Natalie Black, great to have the opportunity to talk to you. Thank you so much.
My absolute pleasure. Thank you for the time.
After the break, Telstra shares dive on a disappointing half-yearly result. Investors Mutual Investment Director Anton Tagliaferro will join me next.
This is Ticky on Your Money, covering the big business stories.
Well, let's look at some more results today. AMP came in as forecast, the market well aware of the troubles. Full-year net profit was down a whopping 97%, just $28 million, with underlying profit of $680 million. Revenue also plunged 50% to just over $8 billion. AMP, of course, hit hard in the wake of the Banking Royal Commission. Shocking revelations prompted investors to pull $4 billion from funds under management. Analysts say the wealth manager's horror year last year will cloud the company's outlook for the foreseeable future.
Yeah, look, it's really tough. I think there's a lot of reputational damage done, and to repair that's going to take years, maybe decades. I don't know. I think people will remember this for a long time, and they'll think twice about investing with AMP. So I'm not sure how you go about fixing that.
AMP has set aside $430 million for potential remediation costs. Now, CEO Francesco Di Ferrari says this year will indeed be one of transition as the company cuts fees and invests in risk management and compliance. AMP has declared a final dividend of 4 cents a share, down from 14 cents in 2018. Now, meanwhile, intense competition is being blamed for the continuing squeeze on Telstra earnings. The rollout of the NBN is taking part of the rap for the net profit declining by 28% and a half-yearly drop in income of more than 4% to $13.8 billion. Revenue from the mobile side of the Telstra business rose 2.4% to $5.3 billion, but fixed-line revenue dropped more than 9%. Despite the drop in profit and income, Telstra says demand for its telecom products and services continues to grow.
The biggest impact, obviously, on Telstra is just the implications of the rollout of the NBN. And we're now 55% of the way through. And so the good news is we've absorbed $1.7 billion of economic EBITDA headwind to date. The sort of slightly bad news is we've obviously got another 45% to go, but I'm pretty pleased with the performance in the context of that, because the other point you mentioned was the markets have been intensely competitive around mobile and fixed, and that has had an impact on industry revenues and what we call ARPU, which is essentially a barometer for industry pricing.
Well, the company says it remains on track to hit its full-year targets on cutting costs and lifting productivity. The interim dividend has been cut by more than a quarter to 8 cents a share. So what do investors make of this result? Someone who has a skin in the game is Investors Mutual Investment Director Anton Tagliaferro. Joins us now. Anton, great to have you here. So what do you make of these Telstra results?
Look, I mean, obviously Telstra's in a period of transition where it's going to lose the fixed line revenues because of the rollout of NBN, and that's obviously coming through in the results. The mobile business is still growing revenue. The profits are a little bit under pressure because of the competition, but it remains the number one player. It added over 400,000 subscribers. So, look, the balance sheet's good, the cash flow's good.
I mean, you're still confident you'll still stick with whatever you've got tens of millions invested, haven't you?
Yeah, look, I think, again, in a sector that's very competitive, which is the telco sector, I think Telstra's the best in that sector in terms of the balance sheet, as I said, is in extremely good shape.
It had a lift from TPG, of course, which bailed out of 5G.
Yeah,
that was
which again,
helpful.
that's still, we still have to see how that finishes up, obviously, in terms of whether the TPG and Vodafone merger goes ahead, which will be, I think, a longer-term positive for Telstra. And, of course, the other thing that's the unknown is the NBN, which...
well, Andy Penn was quite strong today, saying, there's got to be something happening there, because if it doesn't, then prices will go up for customers, won't they?
Well, something has to happen, because you've got all these players now who are NBN resellers, of which Telstra is one of the largest, and nobody's making any money, so which doesn't make sense in the long term. So either prices have got to go up to customers, broadband, or... if there is a change of government, there is talk that the value of the NBN will be slashed.
Yes.
Which means the prices that the resellers like Telstra pay to the NBN will decline, so there may be a bit more margin to be made by reselling NBN.
And the cut in the dividend, you just got to suck it up?
Well, again, that's reflecting the loss of the income from the fixed lines, which I think is not totally unexpected. But at the current level of now, 16 cents a share for the full year, that should be fairly sustainable going forward.
And, I mean, look, you've had, a sort of wonderful affair with Telstra over the years, haven't you? You got very angry with it a few years ago, and you came back in, I think, again. Yeah. How do you see that they've taken advantage of this incredible whack of money that they got from the NBN originally? Did they leverage it in the right way, or have they lost the...
Well, again, it's not so easy in the sense of what do you do with the money. I mean, I think they've looked at all sorts of things. They looked at going to the Philippines. They've looked at do they go into the media and take over a Channel 9, all those things. They did look at them. They didn't make any sense. So at the moment, they're happily... taking in the money from the NBN, reducing their debt. Their interest cover is now 15 times.
But Andy Penn says it's 5G. 5G, there really isn't a plan B. It's 5G is going to work for us.
Well, 5G will give them a differentiated product in the mobile space, because at the moment it has, the mobile market has become a little bit commoditised. So 5G will give them, something that their competitors won't have yet, and they'll have the best network, I'm sure.
Yes.
So that will help them in terms of the ARPU, the revenue they can earn from their mobile customers. Longer term, there is still this issue with the NBN, which has to be somehow resolved. That will probably end up, I'd say, with the government writing down the NBN. That's the only logical, I think, long-term solution.
Reluctantly, yeah.
Well, reluctantly, but it'll be a change of government, so they'll blame the previous one, although... It was the Labour government who brought it in, but anyway, they'll find a way out of that. And then longer term, Telstra has to work out how it uses its good balance sheet, in terms of either returning capital, doing share buybacks, or whether they find the right company to take over.
Briefly, I know you're not really into AMP, but what do you make of its results, its ability to turn around on Ferrari?
Look, I think it's very difficult for AMP. I mean, they're in a difficult spot, where obviously the brand's been severely damaged. They've sold off the bit of the business, the life insurance, which was sort of the steady part of the business. And it's really now, its future, its prosperity really depends on how successfully they can, re-establish the brand as a credible brand. Look, it's going to be tough for a while.
Okay. Tough too at Myer. Another business that you've had a fairly long relationship with. Now it's tottering along at 38 cents. The results are to come. What do we think is going to happen there? Is there anything happening under Ian King?
Well, no, there's no news, obviously. The company's in blackout. Look, they had a very poor Christmas the year before, so this year we're expecting a better set of earnings.
Well, I see Nike's closed its concessional stores in Myer now.
Yeah, look, there's lots going on. The thing about Myer, it is shrinking its base. It is trying to shrink the floor space.
You're still not talking to Solomon Lew about a buyout or anything like that?
Well, he's welcome to come and talk to us at any time.
I think he says the same thing about you.
Well, we have tried to meet him, but then he starts making up things about that we offered him, our shares, whatever, which we never did. So. He said we wanted to sell our shares to him, which is not true. So,
right, OK. But where's the way forward for you with this holding, do you think?
With Myer, well, again, as I said, we've got to wait for there's a new CEO in place, there's a new CFO in place.
You're still happy to wait?
We'll have to wait, yes. We'll see what the interim result shows, which obviously it's a tough period in the retail sector, but having said that, I think Myer compared to the previous Christmas, should have a better.
So, Anton, I'm just looking at all the news around the opposition. David Jones. Well, David Jones has lost its CEO in the last week. Not only that, Gail Kelly, former, big banker, she's actually pulled herself off the owners, the Woolworths Holdings Board, Woolworths South Africa. This is, along with another director. It's all a bit weird. We don't quite know what's going on and why. But can you see a merger of DJs and Myer? Or
look, they tried to do it once before. It may be brought up again. I mean, it makes sense in terms of giving both of them scale, in terms of both of them rationalising their department store network. So it does make sense. There is a complication, of course, because, Solomon Lou's on the register of Myer, and he probably won't be too thrilled with the idea of a merger, because they both compete directly with him, so he probably doesn't want a stronger competitor.
I suppose it all depends on the price, doesn't it?
Yeah, no, but as I said, look, yes, it's possible. It is possible that could happen again, but, we'll have to wait and see. They're both obviously struggling a little bit compared to how they used to perform.
Yes.
And there is some logic to the
briefly, reporting season going forward, how you found it?
Oh, look, it's mixed. It's reflecting the, quite competitive environment that's out there. The world is okay. The, economies are in positive territory, but it's very competitive in most industries. In telecommunications, in retail, in petrol retailing and petrol refining. It's in packaging. It's tough to put your prices up.
Yes.
Costs are going up, and it's tough to grow your earnings.
Still got your Maltese soccer team? Baldridge?
I do. Yes, I do.
Going all right?
Not so well this year, so yeah.
All right. Well, look forward to hearing some good news on that one. Anton Tagliaferro, thank you for sharing your views. Nice to talk.
Thanks. Thanks for asking.
OK, after the break, a fresh look at the 5G bidding war. Your Money's Leo Shanahan speaks with Richard Baldridge, President of Viasat, next. Welcome back. US satellite telecommunications player Viasat provides services in Australia to, among others, Qantas for in-flight Wi-Fi and the ADF, the Defence Force, for secure in-field communications. Viasat President Richard Baldridge is in the country asking the government not to put the 28 gigahertz spectrum up for auction for 5G usage, asking that it be reserved for the growing satellite market. Well, Chief Business Reporter Leo Shanahan spoke with Richard Baldridge about their plans for a new Asia-Pacific satellite and possible retail offering in Australia.
Richard Baldridge, thanks so much for joining us.
My pleasure.
Now, look, I wanted to ask, the head of a big satellite communications firm in the United States, what brings you to Australia?
Well, we just announced last week that we started the construction of our third satellite. With 3 satellites, we can cover the globe and be a true global broadband provider. So the third one covers the Asia-Pacific region, and we hope to have most of the infrastructure and local ground investment for that here in Australia.
Now, you do a fair bit of work with Australian companies and the military already, is that correct?
Yes, we do.
So Qantas, what kind of role do you offer to, what kind of services do you offer to Qantas?
We work with NBN. We were the ground segment provider for the satellite system for NBN, and we provide in-flight connectivity to Qantas. We launched with Qantas a while back. They've been a phenomenal provider. They demand really high-quality service. And right now, we're the fastest growing in-flight connectivity provider in the world.
Now, you're also in Canberra, I understand, to speak to people about the new 28 gig satellite network that you want maintained for satellite communications after the 5G auction. Tell us a bit about that.
Yeah, that's correct. So we rely on the full 3.5 gigahertz of spectrum at Ka band. The 28 gigahertz is the lower end of that, but we rely on that to be able to provide low-cost, really high-quality internet over Ka band satellites. We are the innovator in that space. And what that spectrum allows us to do is drive down the cost of connectivity, both the airplanes and consumers on the ground, to get any type of service we offer.
So why shouldn't other telcos, you think, have access to that 28 gig spectrum, given that they've had the auction for 5G? Shouldn't they get a chance at that as well?
Well, I think there's a lot of spectrum available for 5G, for wireless 5G services or wireless mobile 5G services. That's much better spectrum. So this 28 gigahertz was just out there because it had previously been delegated for satellite and LMDS, which is a point-to-multipoint service. It's not a very good chunk of spectrum for mobility. It doesn't penetrate walls, windows, or your head if you're trying to talk on a phone, for example. While we're making really good use of that spectrum over satellite, we're able to provide extremely low-cost internet to people that have never been connected before.
Yeah, okay. So what would be the cost benefit, do you think, in not having to go to that auction? Obviously, you would save money in not having to do that.
Well, one of the issues with the 28 gigahertz is we rely on it for what we call our uplink spectrum, which is from our ground stations up to the satellite. And if we can't do that, the economics of the satellite diminish dramatically. So we may have to go somewhere else for the ground network. And we certainly prefer to do that here in Australia. It's by far our #1 pick for this region of the world.
Yeah.
We've had good luck in Europe working with them, and we've had pretty good luck in the United States as well.
All right, so where can someone like Viasat fill in the gaps on a ground network in Australia? What are your plans there?
Well, we're talking about many, many ground stations, so a couple $100 million of investment in Australia, and it's mainly very heavily concentrated where the fiber is. The fiber is very close to where a lot of cell towers are. So the best implementation here is to access fiber very, very adjacent to most of the cell tower locations, which turns out to be in more urban environments, urban and suburban environments.
Just talk to us a bit about your work with the NBN already. What kind of services are you offering, just so people can understand where you fit in?
Yeah, so NBN procured 2 satellites, and both of them at Ka band. So they're using this 28 gigahertz spectrum today. We built the ground network in support of that. We didn't have anything to do with satellites, but we built the ground network. So if someone has a terminal at their home, a satellite terminal, or an antenna at their home, those are our products, as well as the networking product for that. Also on Qantas, for example, we're providing the antenna that goes in the airplane, all the Wi-Fi access points within the plane and the servers on the plane to be able to deliver both in-flight connectivity and wireless entertainment.
And what about people in remote and rural areas in Australia? Can they access this already?
Yeah, they can already. They're going to get a service that looks like about 25 megabits to their home by 3 megabits on the return link, which is actually a fairly good service. With our new satellites, we'll be able to provide 100 megabits per second to a home, for example.
Okay, so tell us a bit about when this new satellite is launched, will you be able to have a retail offering within Australia? Would that be the next step?
Well, we'd like to coordinate with NBN. They're a big partner. They've got an obligation here in the country. We don't want to show up and compete with them, but we think we can show up and with them be very helpful and supplement what they're already doing at a very, very high quality of service.
Satellite has a much greater footprint in the United States, perhaps Europe. Why don't you think it's made as many inroads here?
I don't think satellite to date has been as good as the type that we're beginning to deliver. We're already on our current generation satellite delivering 100 megabits per second to homes in the U.S., for example. We've expanded to Mexico with Wi-Fi hotspots in several thousand villages in Mexico that have never been connected before. We are taking that down through Central America. It's growing there. It's growing across Europe. And I think it just hasn't been good. Satellite's been something that you would take or you would get if you couldn't get access to anything else. We're changing that paradigm.
All right. Well, Richard Baldridge, thanks so much for joining us.
Thank you very much.
Hello. Well, now going back to NAB, and here is the cover of tomorrow's issue of The Deal. It's pretty impactful, all about Dr. Ken Henry. The Australian's John Dury spoke at length to Ken Henry, and he's written on the pride and fall of the outgoing NAB chairman. Well, The Deal's editor Helen Trinca joins me live at the desk. Yes, I say, great cover.
Yes, fabulous.
Look, this is really interesting because the bulk of this interview was when John Dury actually spoke to Ken Henry just ahead
of the Royal Commission report.
Of the Royal Commission report.
Absolutely.
And what was his frame of mind?
Well, I think his frame of mind then, what's fascinating about it to us is, and obviously we did this interview, we've got long time frames, and we were keen on getting this interview all over the summer, so John sort of worked on NAB, I suppose, to get Ken over the line, and he agreed to do the interview just about 4 or 5 days before the Commission was due to report. And I guess all of us at that stage, and clearly including the chairman, believed that while he had not maybe had his best day in the office at the Royal Commission in November, that was kind of the worst was behind him. And I felt, you know, from his comments to John, obviously that he thought the public humiliation was gone and he could move on. And so he made some, I mean, he's a very impressive leader, as we know. I mean, he's been a hero of mine for a long time.
Yeah,
you know,
and he's a reformer.
That's right. And so I guess he was, you know, as always, as we would only expect from Ken Henry, he made some very interesting comments about banks, about public opinion, about public debate. But of course then, and he was really not particularly, he wasn't particularly remorseful. He said that I think he very much thought before the report came out that he had not had a good day, but it was about the perceptions of the public of how he'd performed rather than of anything that he'd said or done. And then I think he was, you know, he obviously after that, we went back to him again and he said, look, I'm still, a couple of days later, like the day after the report, he said, I understand why the Hayne is sceptical, but I hope to prove him wrong in time. And then within 48 hours, of course, it was really too much, and the pressure
on his sword. I mean, look, in this interview, he said, and we've just had Geraldine McBride, who's a non-executive director, on the show here. He said to John, how much time, we've got to think about how much time do the directors on their boards of new companies actually spend out in the community, engaging with them, hearing from them, the good and the bad things, and what products they need, you know. But as a public servant, do you think, how do you think he looked at things himself?
I think what's really interesting about what's happened to Ken Henry, and I don't think any of us are, you know, are sort of pleased at the demise of such an intellectual and such an important Australian.
Well, it's an enormous loss
fantastic,
to the top floor,
exactly. I think what's interesting, we can really see now how, as a public servant, you give your best advice. You know, obviously he's strategic and tactical, but he doesn't have to. It's filtered through the political process, right? So Ken, I suppose,
he's a servant of the public, but not very public-facing.
That's right. You know, you're not in touch with. You're not actually having yourself to convince any customer or any politician, any voter. And so I think that's a very different and particular temperament and particular mindset. You know, anyone who's been in business, and particularly in a customer-facing business, you know, learns from, you know, the earliest days as in the most junior job, that it's kind of, you've got to kind of manage those expectations. You've got to manage people. You've got to manage their desires. You've got to.
Well, I thought really interesting again. He said at some stage in the past 3.5 years, the board should have jumped in and said, "Forget all this. This is on fee for no service. This is what is happening. Is a business where every decision affects the life of every Australian. You know, we should change it." So he, you know, he was there, wasn't he?
And hadn't seen enough. But you know, in some senses, of course, Ticky, he was different in degree, I suppose, but not necessarily in kind to other bank leaders, you know, and people who worked at the top levels in banks. I mean, we've had a very scarifying experience through the Royal Commission, and you know, would have reported on it hugely in the last couple of weeks. But you know, it's a kind of a lesson for all of us. What I think's also interesting about this story is Henry. When you look back at his career, even in the bank, he was a leader who was prepared to speak out. You know, he was a very refreshing voice in a sense in business, because so many CEOs are more constrained or restrained.
All right. Well, really interesting article. Plus, you've got some really interesting things on the big tech companies and how they're going to manage themselves, given they're a bit on the nose this year. So, Helen Trinca, thanks very much for all of that. Well, that's all for the show tonight. Tomorrow night, we'll discuss the Helios that's Primary Health half-yearly results with CEO Dr. Malcolm Parmenter. Till then, thanks for your company.